Okay. Everybody ready, or do you need a second?
We got it.
As ready as I'm going to be.
Okay, so what we're going to do tonight is just do a preliminary look at the start of the 18-19 budget. I don't have specific numbers yet for the 18-19 budget. We're still going through our initial process, and I'll explain that as I go through it. But and I want to also just do a little bit of a review with you towards the end of my presentation of where we ended up in the current year budget, revenues, expenditures, and also where our fund balances are at the end of that fiscal year, okay? So slide number 2, Act 1 timeline. If you remember, in October, the board passed a resolution to not increase any taxes above the Act 1 index for the upcoming year, and that is 2.4%, okay? Slide 3, this is a progression, a little bit of a progression explanation of how we start, what we do, the flow of the budget process, just so we can review this with you, and also for the new members so that they can have an idea of what the process is up through the budget. So in September and October, the business office, we developed a budget calendar for the next fiscal year's budget, and then we presented that to the Finance Committee in October. And then, like I said, in October, at the board, at the voting meeting, passed the resolution to not exceed the Act 1 index, which then meant that the board did not have to go into the preliminary budget process and pass a budget in January or /February time frame. It really gives the board the ability to really be able to work on good concrete numbers throughout the spring, and then pass a budget in May and a final budget in June. In November 10th, all the cabinet members, directors, and other principals and supervisors all received the budget guidance from Amelia about the time to start the process and to develop their budgets, and the instructions for entering all their information into the SunGuard system. So throughout November, December, those leaders in our buildings, in our departments and so forth, met with their staff, met with their teachers, and developed their budgets. Over on slide 4, in January then, in the business office, we start to develop the revenue budget for the next fiscal year. At that point, we have 6 months in of the current year, plus we have the recent history from the last few years, and we use the historical collection rates. We also use the certified assessed value that the county and township tax bills are about to come out on. So we use those most up-to-date numbers that we can get to start to project what real estate taxes are going to be, and also then we look at the history to project what all the other local revenues could be for the next fiscal year. And we continue that process then from January all the way up through June until you pass a final budget. We continually look at those revenues, look at the history, look at what's going on in the current fiscal year, look for trends, and then project those for the next year. So in January, a list of new or additional positions is developed. And that list comes from department leaders, the cabinet members, the curriculum department, based on the new curriculum programs that are going to be put in place. And actually, Dr. Price actually takes the lead on pulling all that information together and kind of vetting those requests out. And then as a cabinet, we look at those requests, and then when the HR department's building personnel budget, those new positions are put into that personnel budget, and you'll be able to see a budget with those positions in, and then the board will make a decision whether we keep those positions or we take them back out. But that's the steps that we're going through. So on January 5th, all preliminary budgets were due in the SunGuard accounting system. And at that point in time, moving on to slide 5, At that point in time, Amelia in the business office begins the process of charting everyone's budget into Excel spreadsheets and using a 5-year look back. We look at each individual account code for the previous 2 years, plus then totals spent for each of those budgets for the last 5 years. And we use that information when we sit down with every department leader, principal, cabinet member, so forth, to go over their budgets. And that's the process we're in right now. We'll have approximately 20 meetings with these individuals that are throughout the district to go over their budgets. Dr. Radican, Amelia, and myself will sit down with these folks. We'll have all the data in front of us for the last 5 years, and sometimes we'll go line by line through these budgets to determine if increases are needed or if decreases are called for, or in a lot of cases, we'll actually ask them if they actually budgeted enough. Dr. Radican always makes sure that if she sees something that doesn't look right, she'll make sure a principal or department head budgeted enough in an account. And if they don't have a good reason why it's down, we put it back up. So, but for the most part, we really go through a process of really trying to at that point wring out excess costs or excess expenditures in the budgets, in these individual budgets. We can look at it from department to department. We can see trends. We look at costs at each budget at the elementary level. We compare them to each other. We compare what's going on in the elementary schools. We look at an expenditure per student. So we look at it in many different ways in order to determine what makes sense, whose budget's up too high, maybe whose budget is too low for the number of kids they have. And we also do that at the middle school level. We do the same with the 3 middle schools, and of course the high school is on its own, but we do look at it a cost per student there, but it was really hard for us to compare it to there. So for the high school, we're looking at a lot of historical data, what has it cost, and so forth. And what we try to do is, in this process, we're really trying to wring out budgets that just increase to increase. So this year it was X, next year it has to be Y. But there has to be a real good reason why it's going to Y. And if there's not a real good reason, and if you haven't spent to that level, we're going back to X. So that's our theory and our mindset when we're going through those meetings. Right now we're about halfway through those meetings. This week has been really tough on our schedule. It seemed like every meeting we had scheduled this week except for one got canceled because we were either out on a snow day or we were in 2-hour delays. So right now we're a little bit behind the 8 ball where we wanted to be. So we're going to be scrambling in the next week or two in order to get caught back up, and then in order to be able to work through all those numbers then and put them into a format to bring to you in March for your first look at the budget. The governor made his annual budget address 2 days ago, or yesterday I guess it was, and he's estimating his contributions to education from the state for the next year. He's talking about $100 million more for basic education, I think 20 or 40 million more for special education, and some more in some different areas. But basically, roughly $100 million to basic education. What that equates to Pennridge is maybe $150,000 in additional basic ed revenue. Not a lot of money, not a lot coming from the state, and we know that. We deal with that every year. Our money, the lion's share of our money always has to be generated at the local level because the state aid is just not there for us. So the cabinet members will then hold a budget meeting, and it got canceled this week too. So we'll be rescheduling that one, where we will sit down as a cabinet and look for, brainstorm ways that we can either reduce expenditures or increase revenues. And we'll spend about 2 hours on that process. And then we'll bring suggestions from that, and we'll put those suggestions in the budget if they make sense. But we do that each year, and we'll do that again this year. So over to slide 6, in the March finance meeting, like I said, you guys will be looking at the first round of the budget. Also, Jeff and Brian will be here. Brian will do the transportation budget at that meeting, and Jeff will do the operations budget. Another key date in our budget process is April 1st. That's the date in the contract where PEA members are required to inform the district of if they're going to retire in order to receive the retirement benefits. And that is a date that's very important to us in the budgeting process because there's a lot of savings from attrition from going from a teacher at the top of the scale to a teacher towards the bottom, the beginning of the scale. And we will then build those savings into the budget. So the April finance meeting, then we'll have that information hopefully in place, and we will bring another view of the budget to you for your review. And at that meeting, you'll also see the people services budget presentation and the technology budget presentation. Then at the May finance meeting, again, we'll look at the budget again, we'll update the budget. Also, you'll see the program improvement in the curriculum and instructional budgets that evening. Then over to slide 7. At that point, we will also schedule any additional budget meetings that we need in the process. Now, last year, we didn't. We went from finance meeting to finance meeting, and by the time we got to May, in June, we were at a comfortable place and passed the budget in May and in June and didn't have to add meetings. But we always hold that in our back pocket in case we have to. So the May voting meeting is the first budget meeting, or the first meeting where you'll pass a budget or you'll vote on a budget. You have to vote twice, once in May and then once in June, and you have to have 30 days between your two votes. The budget has to be available for public inspection between your votes, and you can make changes to the budget between your votes. So it doesn't have to be exactly the same what you vote on each time. Once you get to that June meeting and you vote, that's your final budget then. Okay. Any questions about that process of how we'll get from today to June? I know that was a lot and I was talking really fast, but I also know how long you guys have been sitting in those seats. So. Okay. On to slide 8, I just wanted to give you a little bit of a reminder of where we were last year and where we've been the last few years. So when I got here in 15-16, we had a final budget with a budget deficit of about $3.4 million. So we really looked at that and really decided that what we wanted to do was reduce that deficit, that structural deficit, as much as we can each year, and our ultimate goal was to bring that, to a balanced budget in the end. 16-17, we took a lot out of that 3.4 million, and we came a long way. And then last year in 17-18, we ended up with a $337,000 deficit, which was well within the index range. We did not raise taxes, so we reserved that $337,000 of fund balance, and if we need to spend that, it'll come from fund balance. So that would have been equal to about $500,000 real estate, or about a 4.41% increase, or about $17.06 per home that has a median assessed value. So at that point in May and June last year, we just decided, I guess, we've already decided we're comfortable with where we're at. We don't want to raise taxes. We'll reserve a little bit of fund balance, and we'll see where the year goes. But truly, that's a 0.25% difference. So it's not a lot in the scope of $132 million or $133 million budget. So, and last year the board did really well as far as we only saw expenditures go up 1.55%. So that was under inflation growth, under the index growth rate. So we really worked hard last year at holding our expenditures down. We also had a lot of retirements last year, which really helped us out a lot. So if you think back, you remember that we were probably $1 million apart before we got the retirement list in, and then that helped us a great deal. But we also, in that process, we reduced all the budgets that we, went over with all the department heads, about $500,000. So we were working from every angle. So the next slide on page 9 is just the revenue summary. And just why I wanted to show you this, just kind of remind you where our revenues come from. Local is about $100 million of the $132 million comes from local revenue. By far the vast majority of that is the real estate tax, and we've been talking about that all night tonight. About $80 million of that $100 million comes from real estate taxes. That's by far our our biggest revenue source. Earned income tax is the next biggest local revenue at about $15 million. And then there's a number of smaller local revenue sources. So the state revenue, about $31 million. The two main lines in there is basic education funding at about $10 million. And then the other big one is the retirement reimbursement, which is getting to be about $10 million. But remember, that's a reimbursement of an expenditure that we're required to make from the state. It's basically the state's share of that. To me, it's really not a real revenue source that we can use for anything other than paying half the retirement bill. And then the federal revenue is about $800,000, which is a very, very small part of the budget. Okay. So the next slide, on slide number 10, what I'll just show you here is, okay, what does that Act 1 index of 2.4% mean to us? So what that means is the district, if it chose to raise taxes by the 2.4%, could raise an additional 3.2461 mils. Okay, and the tax rate would go from 135 to 138. And for the median assessed property, so when I say that, that's the for the homestead, farmstead properties, the median assessed property. That tax rate is about $4,200 is what the tax bill would be. The impact to the property owner for those additional taxes would be about $103. So if we have to raise the taxes to 2.4% this year, if we had to do that, the impact would be about $103 to the median assessed value home, okay? And if we had to do that, the additional revenue would be just under $1.2 million, okay? So that's the impact of the Act 1 index this year. The next slide will just give you a little bit of a history on the tax rate. So back in 11-12, you can see the indexes were 1.4 and 1.7. For those 2 years, the district did not raise taxes. They kept the taxes the same. So then 13-14, 14-15, and 15-16, the district, and 16-17, the district raised taxes each year. 13-14, the district went by the index, the allowed index. 14-15, the district actually increased by the index and actually requested exceptions from the state to raise the taxes above the index, which they were granted. So they actually raised taxes 3.61% that year. 15-16, that increase was 1.9%, and 16-17, 2.4%. And in 17-18, which is the current year we're in now, we did not raise taxes. So that gives you a little bit of a history. And at the bottom, you can see the impact of those tax increases to that median assessed value property, okay, of what the impacts were. Okay. And the last slide I want to share with you tonight is the fund balance, what's happened to the fund balance for the district over the last 3 years. Our total fund balance in the general fund has maintained relatively stable over that 3-year period. Went from 16.7 to 15.8 and then back up to 16.5. It's made up of unassigned fund balance and some assigned fund balances. You can see in the fiscal year 17, we assigned the $337,000 for the budget, to balance the budget. And then the last line there, you can see our capital projects commitment, what we have in capital projects funding. That's went up from 9.9 million, and at the end of fiscal year 17, we're about 17.9 million. Now that does not include all the projects we did this summer, and it also does not include the projects that Jeff and Mike will be going over here shortly. So that's it. Is there any questions? Okay. All right.
Mr. Donovan, I do have one question or comment. I was just wondering if perhaps you could create a graph or a chart showing the increase in PSERS over the last, I don't know, when it started going up, but maybe 10 years or 8 years.
More than 10, right?
Yeah. And just show the increase in that along with the increases that we had in our budget, just to show the impact that that had on our budget.
Okay.
Actually, PSERS started increasing in 2001. It was slow
Right. It was
between
very
2001 and prior to the recession, then it really took off.
Asking for dollars or percentages?
Percentages, but both.
Yeah,
Any other comments on Mr. Albert's presentation?
just
Go ahead.
thank you. I think it's really worthwhile to take a look back, as you did for us here, to show us the history of what has happened in the last few years
Well,
and the work involved in it.
you're welcome. Thank you.
And to add to that, Mrs. Cullen, one of the things I think Mr. Delbert hit on that we're doing this year, and thanks to Mrs. Grabowski, we're showing the principals and the department heads what has been your spending history over the last 5 years. And that's been really helpful, because they can see, they may think they need it, but they're not really spending it. So that's how we've been able to really gain back some dollars. So I thank both of them, and it's going well.
Okay, thank you, Mr. Dalbert. Before we move to the last part of this, I have just a brief comment. Mr. Dalbert referenced the presentation by Governor Wolf on the state budget, which he presented on February 6th. He's asking for a $32.9 billion budget. That amounts to almost a $1 billion increase, or 3.1% over the previous year. As Mr. Dalbert noted, much of the education funding is level, but the basic subsidy is proposed to increase 100 million, or 1.67%. Special education, 20 million, or 1.78%. The early childhood education includes a $40 million increase proposal, divided among a number of different things. Of course, the school employees' retirement, to Mrs. Yardley's point, the budget provides an additional $263 million for that, and it will then increase to over $2.5 billion that the state's share of the pension costs. And by contrast, the districts are going to be required to pay at least a $215 million increase in that particular item. But perhaps the best news here is, at least for the career and technical education part, there's a $50 million investment in job training and workforce development, broken down among a number of things that would be applied if this budget were to pass in this form, which it probably won't. And of that, 10 million is to develop career and technical education with STEM career pathways, and 25 million to increase STEM and computer science education in the K-12 and post-secondary programs. So those are all things that affect us in one way or another, should they come to pass. So that's kind of the synopsis of the first pass on the budget. The next meeting is scheduled for March 14th. It's the second week in March, not the first. And obviously, as Mr. Dalbert noted, one of the major components of that will be the discussion, the next piece of the budget discussion. So at this point, we are to public comment.
Okay. Get you in focus here, Peter.
That's what he's-
Sue Furlong, West Rock Hill Township. I'm going to go through these budget things pretty quickly. First of all, I'm kind of curious why Peasers isn't going down in terms of the local contribution. I think you all should ask that question because we were told it was because the stock market declined and therefore Harrisburg was underfunded. The stock market is no longer declined, so I would like to know, what is Harrisburg doing about it? I think that's a very valid question, and it would put a lot of tax relief on the local school boards. I have looked at the enrollment for the elementary schools, and so from 2013-14 to the 2016-17 year, this district lost 220 students at 25 students per classroom, which is what the Harrisburg architect at the PDE states. That would be about 9 teachers, and I don't know what kind of auxiliary person is in that classroom, but I think those savings need to be acknowledged and worked into the budget. And based on the projections we had, and I couldn't find the numbers for this year, perhaps the numbers are even lower, therefore the savings should be higher. I would like, well, also, we've got new board members here. We looked at budget stuff right there. I don't know why when we go back to 2015-16, we're looking at budget numbers when we have actual numbers, and we have actual numbers for the year after that and the year after that. When you looked at that 2015 number, it showed a budget deficit of $300,000. Actuals came in to where it was almost $10 million higher than that. In terms of revenues were higher than projected, expenses were lower. Same thing for the following year, not quite to the same magnitude, but we're looking at numbers that don't make any correlation with what is going on now. Okay, those were budget numbers. They could be anything in the world you want them to be because they are projections. And they turned out to be about a $10 million swing and a $4 or $5 million swing from what you guys just looked at. I don't think that's fair when you guys are trying to intelligently look forward and budget. I think that the capital projects need to be enunciated in your budget and then estimated as to how much they're going to be and not just left to chance as they have been. Also, same thing with projecting year-end reserve balances. There's going to be a tax rate change, therefore everybody supposedly is going to be able to take home more in their paycheck. So I think that percentage increases from the taxpayers could be relaxed a little bit because people will still be well off, hopefully. I didn't see any projection of the cost changes for personnel moving from 7 periods to 8 periods or 7 periods to block. I think you need to do that. You need to make that decision to have an intelligent budget. And again, I would go back to Peasers. Now, I'm going to give you a real quick rundown of some questions I had on the airport. First of all, I would see what kind of terms they have with their, he's talking about he wants to have a quality tenant. And he also said, I don't know if you caught it, the tenant is paying the tax increase, not him. So are you going to ask the Pennridge taxpayer to subsidize some guy that's flying in from California on a corporate jet? Because that's what I heard tonight. His tenants are paying the taxes. You can review the video if you'd like to hear it, but that's what he said. I don't feel like subsidizing those people, at least not a whole lot. Maybe enough to get the business. Maybe 5 years, not 10. That was one thing. It says that this airport is a blighted area, it's going to get a tax break because it was underutilized. Well, it's not our fault, the taxpayers, that it was underutilized. You know, we didn't have any heavy regulations on it, and we didn't vote it down. So the underutilization is not something where I feel like I need to bear that burden. I don't even know that it was underutilized. Maybe that was all the traffic it could bear. I would check and find out what is the typical. 10 years is a very long payback. And I don't understand, you know, man, I'd like to have a 10-year break on my taxes. You know, if you want to give him 5 or something like that, I could see that. But 10 years is just inordinate, a long amount of time. Half of us, I'll bet you half of us don't even live in the district in 10 years. He says he wants to attract high-quality tenants, but he never defined what that is and what the difference makes between high quality and low quality. Another thing is, if I were dealing with him, I would look at hotel taxes, and I would look at perhaps a fee for every time a jet lands. And the reason I say that is because that way, if he has activity, he can share the benefit of that activity. If he has no activity, then we're not burdening him. And that would be a way to make up.
Mrs. Furlong, would you please finish?
I am trying to finish.
Well, do it quickly.
I can't talk a whole lot faster, and I think these things are important. And I'll tell you why, Peter. You wanted to rush this through and have it on the next meeting, which is 2 weeks from now. You didn't ask any of the financial things. All you asked about was buses. And the financial is where I'm going to have to pay the difference between
Mrs.
what you
Furlong,
charge him and what he is
If you want
charged.
to continue, then continue instead of lecturing.
You interrupted me, and so
I
I
did. I
told
asked you to finish, and I meant that.
Well, this will get out into the communities. I would like to address you all first with the idea that you all make the decision. You kind of broke my train of thought here. Also, I think that you need to find out. They talk about how, oh, we're going to have a lot of workers, blah, blah, blah. That should impact our EIT taxes, which I think is good. So I think you need to get a handle on that. And I think, quite frankly, let's say that they bring in, one of them was $360,000, the other was $400,000. So you're talking about $1 million if you also take in the earned income taxes on the employees that they bring in. I think that needs to definitely be passed on to the taxpayers. There's no increased expense to this school district because of those additional revenues. There's no additional cost to you. Therefore, that savings should flow right through the taxpayer. If you have a few extra costs, fine, deduct those. But there's no reason for this district to suddenly enjoy $1 million increase in taxes when there were no associated expenses. Thank you.
Thank you. Anyone else wish to comment? No? All right, then this meeting is adjourned.